Welcome to BD Daily Finance News Podcast, your daily briefing on finance and investing. It's 2026, February 26th, and today's theme is Great News, Mild Reaction.
Markets really said, congrats on your record profits. Anyway, if Wall Street were a group chat, it would be all scene zones and no emojis.
Exactly. We'll cover three moves: Nvidia's big quarter but a muted market response, gold pushing around $5,200, and oil slipping as U.S.-Iran talks sound positive. Then we'll translate it into a practical checklist.
My checklist is usually, don't panic sell at 9:31. But yes, let's do the grown-up version.
Story 1. Nvidia reported better than expected results. One headline says Q1 sales surged 94%. Yet multiple market wraps say stocks wavered because the earnings beat didn't reignite the AI trade the way some hoped.
So the company shows up with a trophy the size of a refrigerator, and the market goes, cool, but did you bring dessert? Why would a 94% sales jump not send stocks into orbit?
Because markets trade expectations, not just results. Imagine ordering a double chocolate cake, and the bakery delivers a great cake, but you already paid for triple chocolate with fireworks. If the bar was too high, the stock can barely move.
So priced in is basically the market saying, I pre-gamed this narrative, and now everyone's sobering up and checking the tab.
Right. Another angle from the headlines, there's AI bubble concern and traders taking big bets off the table. That's positioning. When too many portfolios lean the same way, even good news can trigger profit-taking.
Everyone's already wearing the same AI to the moon hoodie, and now the room is too hot, so people crack a window by selling.
What it means for normal investors, watch concentration risk. If your index fund plus your fun tech picks equals one mega theme, you're not diversified. You're just repeating the same bet in different fonts.
Okay, if stocks are shrugging, explain why gold is out here trying to live above $5,200 an ounce. Gold is the emotional support metal, right?
One item says gold breached $5,200 on a perfect storm. Geopolitical risk around U.S.-Iran talks, trade uncertainty, and rising rate cut bets, plus a softer dollar helping the move.
So gold is basically the group chat's, I'm not saying I'm worried, but I packed snacks and a flashlight.
And also an interest rate story. Gold doesn't pay yield, so when investors expect rate cuts, the opportunity cost of holding gold falls. It's basically like your savings account paying less, so no interest gold stops feeling so expensive to hold.
So if rates might go down, gold gets hot. If the dollar weakens, gold gets hotter. If geopolitics gets spicy, gold is suddenly everyone's best friend. Gold is thriving on chaos.
For real people, gold's strength can be a signal that investors are paying for insurance. It can also hint at inflation anxiety. But it's not a magic shield. At these levels, volatility cuts both ways.
Speaking of spicy geopolitics, oil. I saw oil retreats as Oman describes U.S.-Iran talks as positive. That sounds like the market exhaling.
Story 3. Oil fell because the mediator signaled the nuclear discussions have been positive and will continue. Markets often price a risk premium into oil when supply disruptions feel more likely. Positive headlines can shave that premium.
So oil is like rideshare surge pricing. If the app thinks there might be a storm, prices jump. If the sky clears, the surge disappears, until it doesn't.
Exactly. Why it matters, oil feeds into gasoline, shipping, and a lot of everyday prices. If oil stays lower, that can ease inflation pressure. If it spikes, it can re-accelerate inflation and complicate rate cut expectations.
All right, bring it home. Nvidia beats, but the market shrugs. Gold is clinging to $5,200, and oil is calming down on diplomacy headlines. What do I do besides refresh my app like it owes me money?
3-step checklist. 1. Audit your AI exposure, index weight, plus individual tech names, so you know if you're overconcentrated. 2. If you hold gold or want to hedge, size it like insurance, not like a lottery ticket. 3. Watch oil as an inflation input. It can change the rate narrative fast.
So don't marry a theme, don't worship a metal, and don't underestimate a barrel. Honestly, that's also good dating advice.
That's the show for 2026, February 26th. If this helped, subscribe and share BD Daily Finance News Podcast, your daily briefing on finance and investing. And come back tomorrow. We'll keep the jokes light and the explanations heavy.
And remember, if the market shrugs at great news, it's not broken. It's just emotionally unavailable. See you next time.